All right, we are now streaming live onto the YouTube channel. If Zoom is disturbing you, you can visit the YouTube channel. Crypto Pioneers 256, we are streaming live. If you are new or a beginner, I have created a beginners group. I've created a beginners group. You can come in and alert me about it, that you are new, because there are there are new concepts for only beginners. So today's lesson will be just an introduction, and our introduction is gonna be mainly on chart patterns on our topic of study today we are gonna base on supply and demand, and from supply and demand, in the next lessons we shall see chart pattern is formed, and within the chart pattern is formed, in the next lessons we shall see continuation, we shall see those ones that indicate a downward trend. We shall also look at those ones that indicate an uptrend. But today, purposely, we're going to look at supply and demand. Whenever we are trading, we expect the market to behave in different ways. We expect the market to behave in different ways. As I always tell you, I've been trading this coin for quite some good time, and I'm used to taking partial profits. And when I look at this one, this is my take a profit one. This is my BTP1. As per now, this is my TP1. And once it is hit, the TP1 was taken already. So this is my TP. So the TP1 is not yet, it is there. Once it hits that, I will take profit one. And when it comes from here, from the second take profit, and hits this point here, I will still take profit. And this one will be, TP2, take profit 2. So to get used to this, you should be doing practice. To get used to this, you should be doing some practice. Okay? Getting used to this will help you. Getting used to this will help you to make your own analysis. It will help you to make your own analysis. So I've been trading immutables for quite some good time. I always make my analysis in the 4 hours. You can see here it made this pattern, and it was a head and shoulder inverted one, indicating a downward trend. So it came here. So what do I want to look at today? I want to look at such patterns like the head and shoulder, but I'll take you from simple patterns to complex ones. Okay, so I'll take you from simple patterns to complex patterns. Let's now first look at the supply and demand. As I've said earlier, I don't want this Solana, I want this one. Okay, let me bring in this Solana. Is it a perpetual? Yes, it's a perpetual. Now, if I want to trade the Solana, do I have another Solana pair from any exchange? Let me add one. Let me add it here. So let me add Solana here. Let me add Solana to this Solana USDT. Let me add Solana USDT. And Solana USDT. Let me add this one from Bybit. It's okay. We mainly need to do analysis on it. So Solana here, you can see already. It is at 74. So when you learn the practice of supply, when you learn supply and demand, this coin is going down. Let me switch on device. So HBAR is around, it's about to take my profit. It's about to hit my take profit. Which one? I want a fresh coin like that way I can make my analysis. Let's take a SUI. Let's take a SUI. It's one of the good coins. So when I want to trade the SUI will form candles. SUI will form patterns. SUI will form patterns. At the same time, it will form what? It will form bundles. It will form patterns. Now, okay, when I come to SUI and I want to trade the SUI, I will first put it in the 1 week time frame. Now, in the 1 week time frame, we are going to learn a simple pattern. And this pattern, I saw it on SUI. That's why my interest is on SUI. Okay? Whenever we trade, market will always make patterns. And today we are going to look at one pattern. And this pattern is going to be a double bottom. Okay? A double bottom. So when price moves, whenever price moves, it will make patterns. Whenever price moves, because our trading always our trading is based on price action. Price action simply means what the market is doing. What the market is doing. Okay? What the market is doing, or what price is doing. What price is doing. What is price doing? What is happening to the price? Okay? What is happening to the price? Within price action, it will be a complexity, because you will look, when we talk about price action, it will require you to combine the candlestick knowledge that we learned earlier. You will require to apply the candlestick knowledge. Then you will need to apply the chart patterns. Yeah, I want to take you solid by solid, okay? The chart patterns. Now, it means, and as I told you earlier, that when you talk about price action, we are talking about the grammar of trading, the grammar. Mind you, trading has both the grammar and the comprehension. That's how I call it. Me, as a teacher of English, I call it grammar and the comprehension. Grammar and comprehension. So before you come into comprehending means reading and understanding. But the grammar, you should learn the grammar first. You should learn the grammar first, such that you can read and understand. Before you learn letter A, you cannot read the word axe, okay? Unless you first learn this letter A, its sound, then you can sound X, okay? If you don't learn the letter B as a number, you cannot read the word bag, you understand? So the same applies to trading. Trading has grammar and comprehension. Before you learn that this is a candlestick, and this candlestick is bullish, is bearish, before you learn that this candlestick is bearish, this one, you cannot know that this one is a tweezer, okay? You cannot know that this one is a tweezer. You cannot know, okay? So before you learn this pattern, you should be knowing this one later, this one candlestick. I don't know whether you are getting me. Give me one in the chat if I'm clear. Give me one in the chat if the point is home. Give me one in the chat. Give me one in the chat if the point is home. You cannot learn candlestick chart patterns before you understand just a single candlestick. Before you understand just a single candlestick, you cannot understand the candlestick chart patterns. And the same way, you cannot understand the what? The patterns we are going to look at, okay? So where we have come today, those people that are new, please reach out to me, because this work, yes, stay in class right now, but I know this work will not benefit you. If at all you are very new in the business, you will alert me. So those of you that have been with a long time, this work is for you, okay? Today we are going to look at the double bottoms and what creates a double bottom, okay? That's what we are going to look at. And what we are looking at is pure price action. Pure price action means you can trade with a mere chart. We are trading with a mere chart. We are trading with a mere chart. We don't want to see any kind of what? We don't want to see any kind of indicator in the chart. Okay, we just want to see price action doing work. So we need price action at work. Where is immutable X? I think was it immutable X? Okay, let me go with this. Okay, we are looking at pure price action. Pure price action. So I made some analysis on HBAR. Let me remove everything here. It is also bringing the same pattern that I want to look at today. So before you learn the single letter, you need to understand. Before you learn a single letter, before you read a word, you need to so before you learn a single letter, you need to learn the what? Let me leave that analysis alone. You need to learn what makes which letters make that word you are going to read. Okay, so that's why we combine grammar and comprehension and reach to an extent that now somebody can read and write on his own without any hardship. Now, we said that whenever we trade, price will always find our supply and demand zones. And when price does find the supply and demand zones, it is upon you to identify the supply and demand zones within your chart. For example, look at this coin we are here right now. Look at this coin. Even if you are in the bigger time frame of 1 week, you will see that price will still make what? Price will still make patterns. Okay. Now, before we trade, we shall look at this coin in the 1 week time frame. And within the 1 week time frame, you can see that price is making higher highs and higher lows. Price is making higher highs and higher lows in the 1 week time frame, indicating that price is on an upward trend, or the coin is on an upward trend, because it came down here. Let me bring an illustration. Let me bring an illustration here. So when you look at price here, price formed a demand zone at this point here. Where's this thing? And wait, this one here. I mean this. Okay. Now, when you look at this, price made a demand zone around this point, and we said, how do we identify a demand zone? We said that for us to identify a demand zone, those people that have just come into the classroom, we identify a small candle, okay? We identify a small candle being followed by a big volume candle, okay? We just need a small candle being followed by a big volume candle. Something that you are seeing here, that this small candle here is being followed by this big volume candle in the same range. The candles should be consecutive. For example, this is a small candle. This is a small one, a small candle. This is a small candle being followed by a big candle like this one. So once we see this happening in the chart, we just get this one. This candlestick always has its low and high. So you just draw a line on the high. At the same time, we draw a line on the low, and this one becomes our demand zone. Okay. The same applies to the supply zone. The same applies to the supply zone. We just identify two consecutive candles. And the first candle is a small volume candle. And the next is a big volume candle. So we get the small candle, we draw a line on its high. Also, we draw a line on its low. And this one becomes our supply zone. Okay. It becomes our supply zone. What is the importance of the supply and the demand zone? You as a trader, to know the supply and the demand zone, it will always help you to know where do I buy from and where do I sell from. And that is the art within the subject, or that is the art within the supply and demand, as simple as that. So most of the time, when I come to the 1 week time frame, I identify that H bar is on an upward trend. Okay. Reason being, I've seen H bar making higher highs and higher lows. Before H bar makes higher highs and higher lows, because we are going to look at the area of focus. When you look at the area of focus, now, if I'm to look at H bar, I will look at this area that I'm seeing here. I look at this area that I'm seeing here. In trading, we call it the area of focus. So there is an area you are going to track, that area of focus, the area of focus. That's our area of focus. So the area of focus will always tell us where should I press my buy and where should I press my sell. Where should I press my buy and where should I press my sell? And what is the impact of the buy and sell within the market? And when we now here, these ones we call it simple skills. We call them simple skills. Why do we call them simple skills? It is like knowing a season that in the dry season, it is harvesting time. Okay? It is harvesting time. And when it comes to the wet season, it is a sowing time. We have to sow. It is a sowing time. It is a planting time. Okay? We call them simple skills. You should be knowing that during the dry season, we need to harvest. And during the rainy season, we need to do what? We need to plant our seeds. Are we together? So once you know this, it means when we compare our trading, when we compare our demand zone and the supply zone in trading, it means this one will be a rainy season for us to enter the market and invest in the coin. Okay. And when it comes to the supply zone, when it comes to the supply zone, it will be a dry season and it will be time for us to harvest what we sow in the rainy season. So it means once you don't know this simple skill of planting during the rainy season and harvesting during the dry season, you may end up planting in the dry season and your crops get dry. Okay? You understand? Or you may end up harvesting in the rainy season and your plants always get destroyed by water. Give me one in the chat if you have understood the idea of demand and supply, such that I go ahead. Give me just 2 in the chat. Just give me 2 in the chat if you have understood what it means by supply and demand, such that I build from there. Give me 2 in the chat. And if you have understood, if you haven't understood, give me 3 in the chat. Give me 3 in the chat if you haven't understood anything, and give me 1 in the chat. Give me 2 in the chat if you have understood, and 3 in the chat if you haven't understood anything. That process. Give me 3 in the chat. Now people don't know how to use Zoom. This is how we use Zoom. I'm sharing my screen. And when you tap here down, when you look at here down, there is a word mute. If you tap on mute, you are muting yourself. When you tap this one and you open it, the whole YouTube channel will be seeing you, okay? And when you tap here, you can see the number of participants. We are 18. When you want to chat, tap on chat. And when you tap on chat there, when you tap on chat here, when you tap on chat, you can text me a message. For example, you can say hello, okay? If you say, give me 5 in the chat, you can type 5 and you tap on this. After typing 5, you tap on this one here in blue and you send like this. So that's how we use Zoom. Then after chatting, you can, these are reactions. Down here, they are reactions. How do you use reactions? Down here are reactions, sorry. Down here are reactions. Down here are reactions, okay? Here, down, we have reactions here. So how do you use the reactions? How do you use the reactions here? How we use the reactions? For example, somebody, you are understanding what I'm talking about, you can do like this, okay? You can tap on that one and you shall see it on the screen. Or you see that what someone has said deserves a clap, you can give him a clap like this and we shall see it on the screen. And when you want, like, you feel like somebody has said something that is worrying you, you tap on that one and you shall see it rolling on the screen like this, okay? And if you want to raise up the arm, just tap here, raise the arm, and I will see the arm up and I will ask you, so Dima, why are you raising up the arm? So that you will be helped. As simple as that. You shall just stop there on the reactions. So many people have understood. Lydia K, we have said that in trading, you have simple skills. You have simple skills that you should be knowing where to enter the market and where to go out of the market. Okay? For you, if you are to be a successful trader, for you to be a successful trader, you need to be you need to know where to enter the market and where to exit. Okay? So in the one time frame, this coin is an upward trend. It has made a retracement and it is going back. Okay? So jump to the 1 day. What we are doing is what we call top to down analysis. Top to down analysis. Top to down analysis. Top down analysis means you are analyzing the coin from the bigger time frame. For example, 1 month. From 1 month, you go to 1 week. From 1 week, you come back, you come to 1 day. From 1 day, you come to 4 hours. From 4 hours, you come to 2 hours, 3 hours. Look at your coin in 2 hours. How is it behaving in 1 hour? Come to the 15 minutes. Go to the 3 minutes, 3 minutes, and 1 minute to make a confirmation. As simple as that. That's what we call the top-down analysis. Top-down analysis, you analyze the coin from the 1 month, go from the 1 month, go to the 1 week. From 1 week, go to 1 day. From 1 day, go to 4 hours. From 4 hours, go to 2 hours. From 2 hours, come back to 1 hour. Tap on the 15 minutes time frame. Come to the 5 minutes. Tap on the 3 minutes. Come to 1 minute and see what the coin is doing for you to come a confirmation. Within the time frames, most of the time, the bigger time frame will always give us the trend of the market. Where is the market going? Okay, in 1 week. Where is the market going in 1 week? Where is the market going in 1 month? Okay. Where is the market going in 1 day? So most of the time, what is happening in the bigger time frame, it is what we call the overall trend. The overall trend of the market. That is the overall trend of the market. Okay. Now come here and look at what is happening in now come to 4 hours. When you come to 4 hours, this is the time frame most of the time we make our analysis. Okay, that's where we make our analysis in the 4 hours. And this one is a middle time frame. These are bigger time frames, middle time frames, and here we shall see this is the middle time frame 4 hours. Then we shall come back to the 1 hour. We shall come to 1 hour. Then lower yourself to the 15 minutes, and within the 15 minutes to 1 minute, this is where you will find your confirmation for you to either enter the market or exit it. Okay, so bigger time frame will help you find the trend of the market. Where is the market going? And small time, mid time frames like 4 hours, you will make analysis here. And when it comes to the 15 minutes, you will make a confirmation for you either to enter the market or exit. As simple as that. Give me 3 in the chat if you have understood the time frames and how to apply them. Give me 3 in the chat if you have understood the time frames and how to apply them. Give me 3 in the chat if you have understood. Well, how do we use the time frames? Bigger time frames, you show the trend of the market. Where is the market going? Mid time frames, make analysis. Small time frames, confirm your entry or exit in the market. As simple as that. Now, those people who are not typing 3, where do you belong? I expect if you want to type a 3, and I've told you how to use Zoom, you tap on the chat and type. Tap on the chat and type, yes, useful. You can do like useful as done. I told you the reactions. Reactions can show that you have understood. Tap on the reactions and give me this. It means you have understood. As simple as that. So don't just keep quiet, because your work is just to make a reply. Your reply will tell me that you have understood, and another reply will tell me that I have to put more emphasis here. People have not understood. Very good. Now let me go ahead. We have looked at several things. Make sure you can get your book and mark and make some record. Now, when it comes to the time frame, remove this. This was my analysis earlier. Now, this is the chart. And H bar is an upward trend, making higher highs, higher lows. However, on the 1 day, it has made a retracement, and now it is going back the upward side. Okay. Now, within the 1 day time frame, I can put this coin in 1 week first. Okay, 1 week. Or I can look at one. Let me look at 1 month. When I look at 1 month, the coin is on an upward trend. Okay, the coin is on an upward trend. Okay, now I may not even do anything there. Or can make my I can bring my horizontal ray and I draw it around here. That is the tip, and down is the tip. Why is this line so good like this? Tap on it and double tap on this line. Instead of 4 pixels, you type 1 pixel. So even this one, instead of those pixels, put 1 pixel. So 1 pixel makes the chart neat. 1 pixel makes the chart neat. Okay, you understand? The line is so thin, and it can even it is neat within the chart. So whenever you draw the line, you just put it in 1 word. Just put it in 1 pixel, and it will be neat the way you are seeing my chart. I will go ahead in the 1 week time frame. And within the 1 week time frame, I will not disturb myself. I'll just look at the area of interest. So within my 1 week, my area of interest is the high and the low of the market. So I will just make the high. Where is the high? This is my high. The high, sorry. This is the high. This one. Bring it back here. Yes, that's the high. And I will bring the low. And this is the lowest point of the market. So this is my trading range within 1 week. And let me go into one day time frame. Okay. So in the 1 day time frame, here we are. We can see that the market is moving up. It's an upward trend. Okay. The 1 week is respected within the 1 day time frame. You can see that here. Price is respecting this area. At the same time, it is respecting the tip. Okay. So I can come to 1 day. When I come to 1 day, I want to see clear chart. So I'll make my chart like this. And what do I need here? What do I need here? I can easily draw a supply and demand zone in 1 day. Or I can tip. So when I come to 1 day, you will find that market was coming down here. It made a double bottom. This is what I wanted to talk about, the double bottom. What is a double bottom? A double bottom is when price taps a similar bottom, like this one. Price comes here, tap this area, goes up, comes back, taps the area, and pushes back. Whenever you see price coming here, and it comes here again, now for you who has understood what a double bottom is, you will see that price makes a W like this, okay? A W like this. And where price taps here and here, this is what we call a double bottom. That's called a double bottom. A double bottom is a bullish what? It is a bullish signal. It is a bullish signal. And whenever you say double bottom, it indicates market reverse of the upward side. Market is changing direction to the upward side. Market has been trending downwards like this. It comes down. Market has been trending downwards like this. It comes down, taps this area, comes back here, taps the area again, then it pushes back. Where it makes this double bottom, this one here. For example, if I've been trading H bar, okay, and I find out that price comes here in the 1 week time frame, bounces back here, taps here again. I myself, who knows this pattern, I will say this coin may make, because I'm not sure. Price may break here and continue to the downward side. So this one will not be a double bottom. So I need the price to come back here, taps this area, pushes here, comes back here, taps the area, and pushes back here. So once I see price doing this, at this point here, I wait for price, whether is it going up or it is going down. Once it goes down, the pattern is not formed. And once it tries to bounce back, I will just make a confirmation and enter in a small time frame, and I send the coin for some good time to get huge profits because I've seen the double bottom. Okay, the double bottom will always form at the demand zone. The double bottom will always form at the demand zone. And we said in our earlier lessons how to draw the supply and the demand zones. The supply and the demand zone most of the time is good to draw on the 4-hour time frame. Because that's where we make most of our analysis. Let me remove all this. Don't want to confuse you. Let me remove all this. Okay. I know I've combined a lot of things, but all for your own benefit, because I can't build from up. So I see price making a demand zone here, and price is respecting that zone. Okay, price is making a demand zone, and at the same time, price is respecting the what? Price is respecting the zone, the area. So when you look at the chart, here, price tries to make that double bottom. And where is it making it? It is making it near the demand zone. And we said, well, how do we find the demand zone? We find the consecutive candles where one is a small candle and another is a big volume candle. When you look at this one here, you can see that we have a small candle with a small volume in the red. We have more candles coming here up. So for us to apply a demand zone, we are going to look at the tip of this, okay? So we come here, and I told you when we are drawing, we can decide to draw a line on this and this. But before we draw that line, we have a rectangle that can work as that double line. So we can use a rectangle. How do you use a rectangle? Come and bring your rectangle. Identify this last candle in the downward trend. That where we identify the what? We identify, if you want to find a clear demand and supply zone, we identify a small candle followed by a big volume candle. But when you look at here, it is not a bit clear, but this one can give us a very big picture of what we are talking about. This is a small candle followed by a big volume candle. So, but as we look at here, this one can respect the same area. So I can decide to draw my demand zone around this candle here. So I can decide to draw my let me put this pen here. It will affect the chart. So what I do, I get the tip of this candle. I want to draw. What's happening? I want to draw the supply and demand zone. Okay. So I can do it like this. And this this okay. I want it to be clear. That one, okay. So as I extend this, I will just tap on this and bring it here. So that is my demand zone. The demand zone, I just want it to be on this one candle. Let me do it like this. Let me do it again. I need to do demand zone, and my emphasis is to enclose tap on it like this. I need to do the supply and the demand zone, and I can do it like that. Simple. Tap on the screen and it remains there. So that is my demand zone. Now you will see that the demand zone I've identified, it is not a bit clear. I just want it should enclose this candle, this red candle, okay? Let me try to do it better so that it will come out very well. Okay. Just want it to enclose that one candle. Just want it to enclose the small candle like this. Around like that. Okay. Now, when you look at my demand zone, I've drawn, I just wanted it to be here, but it's not clear. Price comes from here, respects the demand, taps in the demand zone, comes here and retests it, okay? Once it retests it, it bounces back. Now, when you look at this demand zone, price is respecting it to the downward side, okay? Price is respecting it here. Price comes back and taps it here. Price comes back and taps at this point here. Price comes back and points here. Price comes back and retests this one. This demand zone, you can double tap on it like this. Tap on text and write the word demand zone. That's the demand zone. Now, the demand zone is always, you can make it bold, you can make it italic, you can increase or reduce the word. You can decide where you want it. Where do you want it? Text alignment. Do you want it to be at the top? Do you want it inside or you want it at the bottom? Yes, then may I see? I want it inside. Then where do you want it? Do you want it at the left? Do you want it in the center or do you want it at the right? I want it in the center. So here I say, okay. So the word demand zone is there in the middle. So this demand zone, that is my demand zone in the 4 hours. I expect price to reach that area and bounce up. Whenever I find price respecting the demand zone, I will look for my entry. Okay. For example, had you looked for an entry, had you seen the demand zone and made your entry around this point here, when the price bounced here, price bounced here, you see how far it went, then price bounces back to the demand zone. You see how far it went? Price bounces back the demand zone. Do you see how far it is going right now? So the demand zone, it is our area of interest. If at all we need to enter the market, okay? Whenever I want to enter the market, I will find the supply and the demand zone. So this is the demand zone. The same way I've drawn the demand zone, we can go ahead to identify the supply zone. We can go ahead to find the supply zone. And the supply zone, in the same way, we look at it in the same way. Come here, where price is ending at this point here. Identify a small candle that is green, being followed by a big volume candle that is red. And that one is always called a pattern. And which pattern is this? Which pattern is this one here? Can you give the name to that pattern you're seeing there? This is a small candle being engulfed by a big candle.
Bullish engulfing.
Bullish engulfing. Thank you very much. So just need to find, is it a bullish or bearish?
It is a bearish engulfing.
Yes, bearish engulfing. So we need to find a bearish engulfing pattern and we draw a supply zone. And on the demand zone, we need just to find a bullish engulfing and we draw a supply zone, a demand zone. As simple as that. That's why I told you that before you know the bullish engulfing, you need to know what a candlestick is. And before you know where to draw the demand zone, you should be knowing where is the bullish engulfing and where is the bearish engulfing. Because these ones we are now combining the first knowledge with this one, with the comprehension of the market. Now we are comprehending, we are reading and understanding the market. And for us to read and understand the market, we need to identify the first basics. What is the bullish candlestick? What is bearish engulfing? What is bullish engulfing? You understand? Now we have seen here that when it comes here, when it comes to the demand zone, we just need a bullish engulfing. Okay, just need a bullish engulfing. And when you look at here, there are small candles here. We just count this small candle plus this one here. So we do our supply zone, we do our demand zone. So when you look at here, we just need to find a bearish engulfing pattern like this one. Small candle being a small candle being followed by a red candle most of the time, and we do our supply zone. So that's what we are going to do here. We shall bring our rectangle. Let me put this one so that it's not in the range to disturb us. Bring the rectangle, put it at the tip, do it like this. Tap in the screen once, make it disappear, then come and draw it right, the way you're supposed to do it. Come and draw it right like that. What do I want? I want price to engulf. I want this, what I've drawn, to engulf this. Okay, to engulf this green candle, this small green candle, because this is a bearish engulfing. You see a small candle being engulfed by the big candle. So on this small candle of the pattern, that's where we enclose the whole of it and we find our supply zone. And because in trading, we always use the supply as red, we shall double tap on this, and where we see this color, which is blue, we come here, tap on it, and choose red. Okay, we choose red. After choosing red, you say okay. Why is it not choosing? Tap on here and choose red, and it will be red. Okay, it means that is the supply zone, and this down is it's our demand zone. You can tap on the supply zone and write a word, demand zone, supply zone. Supply zone. Supply zone. Choose the font. I want font 14. I want it to be bold. I want it to be italic. I want it to be inside, and I want it at the center. I say okay. So the word will appear there, supply zone, demand zone. Now, according to me, I've labeled my demand, I've labeled my supply zone. Okay? And when I look at this coin, it is nearly coming to the supply zone. So whenever I'm trading, I'm going to take caution. At any time, price may sell because price is nearing the supply zone. Price is nearing the supply zone. At any time, it may sell. But this is 4 hours. Now, within the 4 hours, you can identify certain patterns. Which are you seeing? Are you trying? So price can make some patterns. So those are the patterns we are going to look at. Those are the patterns I wanted to look at. Now, when you look at this chart, there is no clear pattern. Those patterns we are going to look, we are going to learn them more. Okay, we are going to learn them more in the next lessons. So this is my supply, this is my demand zone. Now, I want to see to come near in the 1 hour time frame, in the 1 hour time frame, like this, and I see what price is doing. I see my supply zone being respected. The 4 hour supply zone and demand zone is being respected in 1 hour, making them stronger. Price came, broke through, comes here, retests it, comes back, taps within the demand zone, goes to the supply zone, comes back here, but doesn't go to the downward side, retests the supply zone again, comes back here, taps into my demand zone, pushes back here, goes into the supply zone, price comes back here, taps into the supply, comes back here, taps into the supply, comes back to the demand zone, comes back to the demand zone, pushes up but doesn't come completely to supply, stops in the middle, comes back price, retests the demand zone, and now it is pushing up. I have hopes that price will come. I have hopes that price will come from here where it is and it taps into my supply zone. Okay, I expect the price to tap into the supply what? Into the supply zone on H bar, and this is 1 hour. Okay, I can extend within the 15 minutes and I see what is happening to price. Okay, so when I come here and look at price and what is happening, you can see that even the 15 minutes is respecting the supply and the demand zones, making them more stronger. So even the 15 minutes, it is respecting the supply and the demand zones, making them more stronger. So price is more likely to come from this area and tap into the supply zone where there is a 4%. You understand? That is price action. You're looking at price. What is price doing? Okay. I can even extend in the 5 minutes and see what price is doing. Can extend the 5 minutes and see what price is doing. So this is what price is doing in the 15 minutes. So within the 15 minutes, you find that there is a lot of noise in the 5 minutes. So price taps the demand zone slowly, and the price, you will see that price is playing within the area of supply and demand, within the middle of supply and demand. That's where price is playing. You can see price is playing within there. Price is playing within the supply and the demand zone, as we can see. Okay, price is not going beyond. And this one indicates that the price and demand zone we drew on the 4 hour is really stronger, and the price is respecting it in all aspects. Okay, so I can trade with the supply and demand, or with the supply and demand. Okay, so when I look at this coin, it is still on an upward trend in the 5 minutes, making higher highs and higher lows. So there is a possibility that price can tap the supply zone and give me some profit. You understand? So that is price action. What is price doing? I don't need an indicator. I don't need an indicator. I just look at the price action. I just look at supply and demand. I don't need any indicator. Okay, I don't need any indicator. I just look at supply and demand. I see coin is coming back to the demand zone. I look for a buy. I see price is coming back to the supply zone. I look for sale. As simple as that. I don't need an indicator. I just use price action. So price action, I told you, ojakunira supply and demand. Price action, ojakunira candlesticks and the way we have been looking at them. So that is what I had for today. And my emphasis was to show you the double bottom and the double bottoms, and these appeared. Was it in one day? Yes, this was 1 day time frame. You can see within the 1 day time frame, and you come to 1 day time frame, you can see that there is this price respected this area. So we can also draw a demand, and we can show a demand zone here. There is a demand zone. I don't know whether you have seen it. There is a demand zone on the 1 day time frame. I don't know whether I didn't see this. There is a demand zone. Tap on it, move this one, extend here, extend a bit there. And since it is a demand zone, and tap on it, I can tap on it since it is a demand zone, and I tap on this thing here, and I give it a green color like this. Green color, okay? I can tap on it, tap here, and I don't extend it to the what? I don't extend it to the what? No. Let me look at the style. I don't extend it to the right, and neither do I extend to the left. And I say, okay. So my demand zone will be here. So like this. So I don't extend it to the right, and I don't extend it to what? To the left. I leave it at it is. Sorry, it's the style. Don't extend it here. Yes, I just extend it in the middle, and it lives there. Size it up, and okay, let me extend it and see whether it will make it clear. Extend it, the right and the left. Then I bring it closer, like this. So you can start to have a supply, a demand zone in the 4 hour. And within the demand zone in the 4 hour, this is where we have formed the double bottom. It's not a bit clear, it's disturbing. This is the candle that I wanted. That's the kind of my interest. That is the kind of interest. Hey, you just want this candle, think of this one. And there, okay? So this is our demand zone in the 4 hours, in the 1 day. It's a demand zone, and this one is a demand zone. So this is the demand zone. Demand zone. You can see that within the demand zone of 4 hours, within the demand zone of 4 hours, within a demand zone of 4 hours, within a demand zone of 4 hours, we have a double bottom. Price comes here, taps in the area, pushes back here, comes in the area, pushes back here. So we have this area here. That is a double bottom. And whenever I say double bottom, whatsoever the time frame, it indicates uptrend. You're going up, price is going up. Even if you go to the lower time frame, you can still find similar double bottoms. You can find double bottoms. Sorry. You can find double bottoms. So look at 1 day, you can say double bottom here. Let's look at 1 hour. Let's try to find a double bottom in 1 hour. That was my emphasis today. You can see that this one tried to make it again. However, it tried to make it triple. It tried to come back, taps the area, comes back again, taps the area, comes here, also taps the area. So it makes a triple bottom. A triple bottom is also another another pattern we shall see. So whenever you are trading and you say double bottom, price making a W, it means that is a reversal signal to the upward side. It means price is reversing to the upward side. So most of the time, most of the traders, you should be knowing that price to make a double bottom, it comes here, taps into the area, bounces back here, taps into the area, bounces back here. Now, for you, once you see this forming like this, so before this one, before this leg, you identify that price came, taps this here, comes back here, taps here. Price may make a double bottom. Then for you, since we have known that double bottom, when I said double bottom, it means uptrend. I'm going to go long, or I'm going to buy. I'm going to make a buy. If I'm going to make a buy, I will come into this leg and wait for confirmation. For example, we've seen that in the 1 day price is making a double bottom here. Price is making a double bottom in 1 day. For example, I can label the areas where it is making a double bottom. Okay, I've seen in 1 day that price, for example, I've been in the 1 day, price neja netapingawo nekomawo netapinga 1. So when I come to the chart, I find that price is just here. So when I come to the chart, I find out, when I come to the chart, I find out that price is where? Let me label that area. When I come to the chart, I find out that price, where is this thing? Where is my circle? Isn't the circle here? Okay, let me add it to the favorites and bring my circle and put it into the favorites. Where is it? The circle. I tap on here. So I've seen a price around that area there. This is where I've seen my what? This is where I've seen the what? I've found out that price is coming, and price is playing within the chart, comes here, taps into the area, goes back here, retests the area, comes here and sits here. So in my mind, I will understand, this coin may make a double bottom. If it is making a double bottom, when will I enter this double bottom? Should I look at the coin in 1 day and I just enter? No. What do? I extend this in 4 hours. Remember, I've seen my area. I've tapped in the area in the what? I've tapped the area in what? In 1 day. Now I've come to 4 hours. When I come to 4 hours, you can see the what? The bottom that I labeled in 1 day. There it is. You can see how price is behaving. So price came all the way from here. Price comes all the way from up. Price comes all the way from up, taps into this area and bounces back. Now, I can't enter the market in 1 day still. Let me go to 1 hour and see the pattern and see that area. So I come to 1 hour and I try as much as I can to trace the area that I labeled first. And when you look at that area, it is making a tip. It is making a tip. You understand, in 1 hour. But I need to confirm it in 15 minutes because I'm going to take a bigger time frame. Okay. So I come to 15 minutes. When I come to 15 minutes, I trace the same point. I'm tracing the same point. Why? Because I put a dot there. So I'm tracing the same area to see whether it gives me entry. Okay. To gives me entry. And when I'm taking if I'm taking trades in 1 day, you can see where it is right now. So if I'm taking a long-term trade, like for 1 day, in the 1 day time frame, I can confirm that in 1 hour. I can come here and look at it in 1 hour. Okay, in 1 hour. What do I need in 1 hour? What do I need in 1 hour? I need the price to tap the area that I saw earlier in the 1 day, and I need the price to come and break the structure. Okay, I need the price to come and break the structure. Okay, so you can see right here that price came. It can't extend. It's okay. It's not extend. So I see price is here. It tapped this area, which was a low. Price plays around the area. Then after it breaks through the area, it breaks through, they would have been the demand zone, breaks through here. So I can just wait for price and I make my entry around this point. Okay, I make this point. I make entry around this point because price has gone away from the demand zone. So price is pushing higher. Okay, price is pushing higher. And if you had known this and you have entered around this area out of the what? Out of the demand zone, you will have made some profit. Okay, you have made, so if your entry is around this area at the retest of the demand zone, so your entry, you will always test, or you will always look for the supply zone, or you can even take only 2/3 of the journey, or halfway the journey. You understand? That's what we call now. What the reason why you are doing this range, all this percentage, to see the percentage profit, we need to have a target. Whenever you are trading, you should have a target. Your target can be a long term, it can be a short term. You can say, for me, I need a 3% from this coin. Another can say, no, for me, I want a 4% on this coin. Another can say, no, for me, I want a 5% on this coin. Another says, no, for me, I want a 30% on this coin. So those that need a 30% profit, that's what we call a swing. We swing trading. You take a full swing, okay? But you do your analysis in the bigger time frame, as we have seen, and you go profit with the small time frame. Going to profit in the small time frame. So that is it. If I decide, had you decided to take that to take the Dow bottom and use it as your entry, you can see how much profitable you could be. Okay, and the price is still moving away from this minor demand zone and pushing up the supply zone. If price breaks through the supply zone going to the upward side, the coin will remain on an upward trend. If price comes back and breaks through this demand zone, price will have changed and it will come back the downward side. As simple as that. Unless you have any question, I'm available to answer. Unless you have any question, I'm available to answer. The bottom supposed to be equal all. Most of the time, does is supply and demand expire? Does the supply and demand expire? Like the question is, somebody's asking, is the Dow bottom supposed to be equal? Yes, most of the time, we need the Dow bottom to be equal. We need Dow bottom to be equal. For example, now here there is a triple bottom. Now here, let me consider this. Let me consider this. Let me consider this and this. So you find that price taps here, price comes back, taps this, comes back here, taps this area, now it's going back. This can see that a price is respecting the same area at the same line. That is a Dow bottom. You understand? It should be at the same bottom as we have been asking. That's good. Then somebody's asking, does the supply and demand zone expire? The supply and demand zone will not expire, but whenever you go to any time frame, you will find a supply and demand zone. For example, if I'm in 1 week, if I come to 1 month, this is one month, and in the 1 month, if I want to draw the demand and supply in 1 month, this is my demand zone in 1 month, and this is my supply zone, and this one will be my supply zone. I'll just take this small candle, small red candle, being engulfed by other candles. So I'll take this one to be my supply zone, and I take this one. I take this small candle here with a big volume candle. I name this one to be my supply zone. So when I go to 1 week, the supply and demand zone will change according to my time frame. So when I come to 1 week, here, when I come to my 1 week, you will see that I can find the supply and demand zone in 1 week. I just find a small candle here, being engulfed by the big candle. I draw a supply and demand on the two. Okay, I draw the supply and demand. So I just find two candles. This one is here. This small candle being engulfed by the big candle, and somebody said this pattern is called a bullish engulfing. Somebody say this is a bullish engulfing. Somebody say that is a bullish engulfing. So we just find a small candle being engulfed by the big candle, a big volume candle. So on the small candle, on this small candle here, this one, this red, you draw a line here, you enclose it in the rectangle. And once you enclose it, this one becomes our demand zone. Okay, you go to the upper time frame, you look for the selling candle, you look for a big volume candle, which is a selling candle, being followed by a small candle. For example, here, you can see this is our small candle, and being out by the big candle. You understand? This is a small candle, being followed by a big volume candle. So you take this one at its top, and you take this one at its bottom. So this one becomes our supply zone. This one becomes our supply zone. That is where, that is 1 week time frame. Let's go to 1 day time frame. When you come to the 1 day time frame, we shall find our supply and demand again. We shall find our supply and demand again. You do the same thing still. Make your chart clear. Make your chart clear. After making your chart clear like this, find a candle. Come here near the bottom, find this small candle. I can go even to the tip. I can go to the tip here and I say, this is my 1 week. Okay, this is a small candle. I can take these candles here. I can say, this is a small candle here, being engulfed by this one. All right. So I tap here, I bring my rectangle, I draw a line on this top. I draw a line here. I find this is my area of interest. I draw a line here on this one, and this one should be a rectangle. You enclose this one. And enclose this one, this is a big volume candle, small volume candle. This is our demand zone. This is our demand zone in 1 day. But in 1 day, since this one is a demand zone, yes, but they are even minor demand and supply zones in 1 day. So when you look at 1 day, you will see that when you come here in 1 day, you will see that there is a big volume candle, this one, and there is a small demand, there is a small candle. So I can find another, I can go ahead in the 1 day and I find another demand zone, because you can see that price is respecting here. Price comes here, breaks through, comes back, goes here, comes back, goes here, comes back, goes here, comes back, goes here. It means price is respecting this minor demand zone. In the 1 day, it is minor. When you got the 4 hour, it will be a bigger, okay? It will be a major. So I can come here and draw lines. I can come here and draw this from here. I see where is the small candle. This is the small candle. Where is the big volume candle? This is the big volume candle. So on this, I enclose the small volume candle, and when I enclose it, it will go through even the small candle or even the big volume candle. This one becomes our demand zone. Simple. This one becomes our demand zone. So I go ahead, after completing that, I come here up and I say, where are these candles that are in the supply zone? These are the candles that are making a tip. I want to identify a small candle being engulfed by a big volume candle, a big selling candle. So I come here, I do my supply. This is it. I do my supply zone and I label it supply zone. Okay, that's 1 day. So even in each and every time frame, you can find a demand zone. Okay. So I come here again. I look at price. This year I'm in the 4 hours. If I'm in the 4 hours, I can say, okay, in the 4 hours. In the 4 hours, I see where is the, I can look at this. No, sorry. In the 4 hours, is it locked? No, it is not locked. Why isn't it moving? I extended it right and left. It's okay. It'll be like this. So when I come here, you can see that the demand zone in the 4 hour in the 1 day has been respected even in 1 hour. In 4 hours, it has been respected. The same demand zone in 1 day here, the demand zone that was drawn here is being respected. So even the 4 hours when you come to 4 hours, you do the same thing. You make your chart clear like this. So you can see this is a small volume candle, this is a big volume candle. So you can tap on this. You can tap on the demand zone and you make it clear. Make sure now when you come here, there are a lot of candles, but you use the same technique that you used at first. Okay, find a small candle a small candle being engulfed by this big candle. So you can even decide to take this small candle and this one, and you draw this rectangle on this. I don't know why it is not moving well. So you draw your line to here. You encross this. You encross this and this, and you draw your demand zone. Okay, you draw your demand zone, and when you look at it, price is respecting it very many times. Price is respecting it. If you don't see it here, if you see that here it is not clear, if you see, for example, if you look at here it may not be clear. Find that some candles are the same. So you use this. You see, some candles are the same. So you come here, you use this one. You see, let me see. I say here it is not clear very well, but here the candles are good. They can give me a clear supply and demand zone. Okay, so I can transfer this line and I place it here. Okay, and I enclose this. And when you go back in the recent days, you see that price is respecting the area. Okay, price is respecting the same area. And me, when I see this, that when I've drawn this rectangle here and the price is pumping like this, I just elongate it like this, and it taps into all the levels. I just say this is all the demand zone, because in the 4 hours I've seen, taps here within the demand zone, comes back here, taps into the demand, comes back here, price comes back here, taps into the demand, comes back here again, taps into the demand zone, comes here, doesn't reach the area, comes here, retests the demand zone. So you can see that this is a common area of reaction, common reaction area. Okay, besides being a demand zone, it is a common reaction area. Price is respecting that area so much. Price is respecting this area so much. So whenever I see price coming to this area, I look for it. When it doesn't break through down, it will keep the upward side. And when it breaks this demand area, since it is a big demand area, I expect price to behave in a different way. You understand? I expect area to behave in a different way. So even if I come in the 1 hour time frame, in the 1 hour time frame, still I have the supply and the demand zone in the 1 hour. You just make it like this. Just make you just make your chart clear. For example, here, for example, this area here, you can see that this is a small candle and the next is a big volume candle. So I can draw here a supply zone around, a demand zone around here, and you can see price respecting it the upward side. As simple as that. So whatsoever the time frame, when does supply and demand expire? The supply and demand zone does not expire. The supply and demand zone does not expire. For example, let me give an example on immutable X. I traded immutable X and I gave it a supply and demand zone. Now, that person, when does it expire? The supply and demand zone will not expire. We expect now, this is when, now I want you to look at this. Look at what I did here, okay? I've been trading this coin for quite some good time, okay? This is my weekly low. When you come to my 1 week, this is the coin in 1 week. This is my coin in 1 week, okay? And I labeled the weekly low. This is the weekly low. This black line is my weekly low. And when it go high, this is my weekly high. So the weekly high and the weekly low will not expire. I will leave them in the chart. When price breaks above my weekly high, it means the coin is pumping higher. You understand? And when price breaks into the weekly low, I will see that price is going down. When I take the same chart in 1 day, things are now different. Things are now different because I've changed the time frame now. That person who has been saying, does the supply and demand zone expire? The answer is no. Now, this is when you can make your analysis. Let me remove everything here. Now, here, look at this coin here. Look at this coin. The demand and supply zone will not expire. But now look at this. When you look at this here, this one, no, maybe I do this in 1 hour. Okay, look at this one in 4 hours. Okay, look at this in 4 hours. In 4 hours, you see that I tried to draw my supply and demand zone, okay, though it was not clear. For example, good analysis was on Solana, isn't it? Was it on Solana? Analysis was on Solana. Yes. Now, look at this. When I was trading Solana, I had a minor demand and supply in the 4 hours. This was my demand zone in the 4 hours, and this is my supply zone in the 4 hours. The demand zone and the supply zone will not expire, and I will still use them in my analysis. For example, look at this. Look at this chart. I traded the Solana from here. I entered the market around this point, and I took profit here. When price tapped into the supply zone, it began selling. I had to sell up to the demand zone. When I'm in the selling position on Solana and Solana reaches the demand zone, I will just close my position because in my mind, I know that when price reaches the demand zone, it will bounce back. All right, it will bounce back. Once it bounces back, it created another supply zone around this area. Okay, it created another supply zone around the area. And when it created another supply zone around the area, let me even put it in red. It created another supply zone within the area around here. When it created another supply zone within the area, it will give me a mind that now I'm going to sell. Okay, price is going to sell. Price will come back, sells, and it taps into the demand zone. You can see that price came and retested this demand zone you see here in the 4 hours. When price retested the demand zone, I wait to sell or I wait to buy. If had you bought here around this point, you would have taken profit up to here. You understand? But you can see that price came back and broke my demand zone. Price came, tapped into the demand zone for the first time, pushes back here, but fails to continue to the supply zone. Price came back and passed through my demand zone, going to the downward side. Whenever I see this demand zone will not expire, and I will always leave it in my chart. This demand zone will not expire, but I will always leave it in my chart. Why? Because it is a key level in the 4 hours. And when price breaks through the demand zone going to the downward side, I will know that the coin is now going downwards. I will always look for sales only. Price is selling, and I'm going to look at sales, only sales. I'm going to look at only sales. You understand? And once I see price is selling, I will not enter the market. Remember, before all that, I had also labeled this demand zone here. This one is demand zone. Okay? This was a demand what? This was a demand zone. Let me write it there. This was a demand what? This was a demand zone. This was a demand zone. This was a demand what? This was a demand zone. Okay. Are you seeing the demand zone here? This is a demand zone. When in this area, the 4 hour area, you can see that after price breaking through this demand zone, which was minor here, price comes back and sits into the demand zone around this point here. You can see price comes back, price ekomawo netula mu demand zone yange wano. So when price comes back and sits into the demand zone, I will wait for price to bounce back from this area to come back this area. Because I know here within the demand zone, there is this high buying pressure. Most of the buyers, large buyers, okay, large buy orders were placed around the demand zone here. And I expect price, when the price comes back, when the selling pressure is high, it will be resisted within the demand zone. The demand zone is always the buying zone. Many buyers look at this area and want to buy from here. That's why price did not go beyond this area. When it tapped into this demand zone, it pushes back. So whenever I'm trading, demand zone yange mba nagirebolingze dda nti neno demand zone. For example, this is the demand zone here. This is here, around here, there is a demand zone. So wembanga mbadde ndi mu kushotinga katale nenkalaba nga katuse mu demand zone yange, webanga mbadde shorting akatale nenkalanga kaze ne katuka mu demand zone yange, I will take profit around this area. Why? Because I know that the buying pressure, the buying activity around this area will be against my trade. You understand? So wano nja kuba maze okufuluma akatale kubanga kimanyi when price taps into the demand zone, it will build a buying position, and my position is a sell position from up. Oba kitegedde? Kigano, this it seems a simple skill. So wetwalaba sola nange ekkirira wansi, it came back and it tapped into the 155 area. The 155 area was a demand zone earlier. In this way, it was a demand zone. It was a demand zone around this point here. It was a demand zone here, around this area here. It was a what? It was a demand zone. And since it was a demand zone around here, it was respected. That's why njirebolinga nenjirekayo. I label this area nenjirekawo wano. Mbera najirebolinze dda. Kyetuyita to wait for your trade to play out. You understand? Obero kimanyi bulungi until you buy from the demand zone. Why is the chart like this? Obero chimanyi bulungi tino, you will enter from the buy position. Sorry, I don't know why the chart is behaving like this. Is it network? Sorry. Are we on? So demand zone yo oleko jirebolinze. Most of the time you will wait for price to tap into your demand zone and you make a buy, and you will wait for price to come into your supply zone and we make a sell. What if it is broken and the price doesn't come back? Yes, that's why we wait for confirmation. For example, here, price comes here, taps into the zone, the zone here, like here. Price here tapping out, nemala nejja waggulu. But bwe yajja waggulu, price yakoma wano teagenda eno waggulu mu supply zone. So that's why kati wano obeera okimanyi nti nno price sorry so wano obeera kimanyi nti nno price etapping mu demand zone, minor demand zone, okay, neyambuka waggulu. Price weba ekomawo mangi suubira okukomawo mu demand zone yange, naye wano waliwo fair value gap nja gyogerako olunaku olulala, okay. It is also a buying, it's okukola nga buying area or selling area depending to where it is formed. Now price mbadde nali ngisuubira okukomawo etapinge mu demand zone, naye bwe yajja akomawo ku fair value gap. Kati zino zona areas obeera oziraba. Kati singa price tekomawo wano kitegeeza eno price already price obeera wagirabe that eno kati eno fair value gap price ekomyewo fair value gap okitegeera. So tugenda kubanga tubisoma byonna. Allow me stop here. It is already 8. That's okay. If it is 8, if you have any question, if price breaks the zone, it means continuation. Whenever price makes the demand zone, if price makes it through the demand zone going downwards, it means continuation to the downward side. If price makes through the supply zone continuing upwards, it means price is continuing to the upward side. As simple as that. Unless you have no question for me. I'm not well.
Yes, Madam Prof, tweyanzizza nnyo tweyanzege naye nze kyembuuza analysis gwe tukoze akola mu support ne mu features.
Analysis ajja kukola your confirmation should be in the lower time frame. Analysis akolera ddala bulungi
Mu features ne mu support.
Akola mu features ne mu support. Now what disturbs us is for you. Now let me take this coin in one day. When you look at this coin in 4 hours, it is coming down. Mutable X is coming down. Okay. And if mutable X is coming down, let's extend in 1 hour. This is what is happening in 1 hour. It is coming down. But when you look at the trend, let's look at 4 hours. This is 4 hours. The overall trend of the market is making, here is making high highs and high lows because market comes here, changes character. Okay. And let's look at 1 hour. We look at 1 hour. price yaze ne tapping wano wansi nejja ne komawo wano nejja ne kira wano wansi nejja ne kira wano wansi wano price ya tapping is mu demand zone eno this was a fair value gap this way price ne tapping esobola komawo wano price when you look at 1 hour price has been trending downwards. Okay, now you can see that if price breaks the area, if price comes back and breaks this area, it will have changed character in 1 hour. So, where is the coin going in the bigger time frame? Okay, price of no, it is making higher highs and higher lows. Price is put trend in 1 day. But when you come to the 1 hour, price again so for you to confirm this, you need to go to the down. For example, if you are trading futures, with the futures, you have to be more careful. Okay. For example, let me come to 15 minutes. Do you see what is happening in the 15 minutes? The 15 minutes. Now, what can take you out of the market is your big leverage. And I will introduce the 1% strategy. The 1% strategy will always control you from getting losses, especially when shorting all along in the market in the futures. The 1% strategy. Together introducing, you have seen it and it is making out. So when you look at the 15 minutes, price is the one, net tapping out, the breaking, nejja ne changing, ne kuma wansi, weze wagulu te change te breaking the one. Price breaking. Singa price breaking wano egenda kweyongera wansi. Kitegeeza singa olabye coin eno mu bigger time frame gololoza nne erikwa ku trend no yingira egenda ku liquidating because what is happening on the price right now, it is a downward trend. Okay, price is coming down, so you can even extend in the 3 minutes time frame and you see that price is moving where? Price is moving down. So within the futures, or kubeera keen nnyo, especially in the lower time frames. So you can see that price broke this area, it tapping wano, ne tapping wano. Esobola tapping wano ne komawo waggulu. Because this was an area of resistance. But within the 3 minutes, but once it breaks this one and comes back downward side, it means price is continuing to downward side. As simple as that. So the analysis will apply in the upper time frame and the lower time frame. But when you are trading with the futures, it is good to understand SMC, and you're going to put much emphasis on SMC when time comes. Allow me to stop here. I have cough. However, I don't want to leave the class unattended too. All right.
Madam Prosi.
Hello.
Tweyanziza nnyo okutusomesa awo naye kyembadde njagala okwongera okutegeera obulungi ekibuzo kyembadde mbuuza wali nti singa price breaking demand oba ne breaking supply zone eyo supply zone nsobola ogikyusa neefuuka demand singa eba tekomyewo nga yeeyongeddeyo bweyongezi waggulu oba singa breaking demand nekkira bukkirizi wansi nebeera nga tekomyewo ng'ezannyira buzannyiza eyo wansi nsobola creatinga demand endala wansi eno demand yabadde nenyifuula supply
togifuula supply kati gwe nkimanyi kyoleeta kiri kya support and resistance tino if the support is broken it becomes another what if the support is broken it becomes if the support is broken it becomes the resistance. If the resistance is broken, it becomes no. Kati wano kigenda kuyamba muki. Nkugambye demand zone yo lekango girebolinze. Buli demand zone yo lekango girebolinze. Price buli wetukawo, you expect something there. Kati wano, this was a demand zone na girebolinga. Senga price ekomawo. Njusubira obutasukka this area. Nkimanyi tinero, this is a kigenda kuyamba ko tinno, ogenda kubango kimanyi tinno. Supply zone tutundirawo. Demand zone tugulirawo. Buli price wetuka mu demand zone yo expect buys. Buli price wetuka mu supply zone yo expect sales. Okitegedde? Once it is broken, senga price energy ne breaking area kigenda kumpa ntino the price is there is a continuation ngenda funonya continuation entry to the downward side. Okitegedde? So rogambuno demand gireboling eberewo supply eberewo buli price wetuka mu supply expect sales buli price where to come demand, expect buys. You understand? So don't change the supply to be demand. It will not work. Whenever price meets the demand zone, you put it in your head that here there is a demand zone. For example, senga abadde shorting eno market. Nenji shorting okuva wano waggulu wano, nenkola entry yange wano nenzija. Ebe etuuka wano nengenda okebera nga wano nga na labeling order ngenda kudde mu mabega ngambe what was this? This was a fair value gap. Price will bounce back. I will sell from here because wano nsubira opposite direction yange okujjamu. Do you understand?
Nkitegedde.
The demand will not be, the demand will remain a demand and supply will remain a separate supply. You are using them, you apply them in your trading that whenever price meets the demand zone, I expect buys. Whenever price meets the supply zone, I expect sales. That's it all. Do you have any question? Allow me to stop here. Twina lesson okusawa 3 z'ekiro. Endeavor to attend. Come one, come all. Bye bye. Wish you well.